Hey everyone, and welcome back. Now today we're going to be talking about just the state of the overall market. Obviously we've seen a really nice bounce, and so hopefully this is going to be kind of like a bit of a retrospective on what we've seen over the past probably 36, maybe 48 hours, the dip, the bounce, all that type of stuff. My hope is that if you were paying attention and you do trade short term, again, I'm not suggesting that everybody should trade short term, and also this is not financial advice because you need to make your own decisions and all that type of stuff, but I am suggesting that if you are essentially a short-term trader, hopefully if you listen to this channel long enough, or you have listened to this channel long enough, you should have seen exactly what was going on and hopefully made a decent bit of money when we were seeing this dip. So anyway, I want to talk a little bit about that, kind of go over some of the data that we are seeing, a lot of that type of stuff, and then we can go on from there. So anyway, let's go ahead, dive right in. Starting out, we can see, looking at crypto bubbles, obviously we did see that big bounce on the day here. We can see, XRP, IOTA, Lido, Kaspa, ALGO, AI16Z, Radium, a ton of these all up over 10%. So we've seen a pretty nice bounce within the market. AI16Z and Virtuals both bouncing pretty nicely. We did talk about both of them somewhat at length yesterday because they were two that had been beaten down pretty hard. If we look at the week, AI16Z still down 30%, Virtuals 20%, and if we look at the month, Virtuals and AI16Z actually both up. But at the dips, or like the bottoms of the dips, we did see AI16Z down over about 50% in a week's time frame. So a pretty nice pullback if you had conviction in some of these AI agent plays. I mean, we saw some really, really nice drops that you potentially could have taken advantage of. One that I was actually thinking about making a video on yesterday was Kaspa. Kicking myself a little bit about that, just because we'll take a quick look at the chart, but it looked like it was setting up to be pretty nice. I don't think anybody could have necessarily predicted this 15 to 20% bump that we've seen just in one day, but it was looking nice, just kind of from like a risk to reward. Again, not necessarily expecting this type of move for certain. So moving on, I want to take a look at a couple of different charts. We can see Solana. I actually did open a long trade on Solana just because of exactly what we saw here. We've been talking about these liquidity zones for weeks at this point. We saw that we had actually fallen well outside of this liquidity zone, as well as falling outside of the Bollinger Band. And as I mentioned, whenever we fall outside of the Bollinger Band, it's almost certain that we're going to be coming back in very, very soon. It didn't even take one candle to get back in the Bollinger Band. Essentially, we can actually see we've come back up kind of to the top of this liquidity zone. We have been seeing some wicks to the upside, so maybe a little bit of weakness up here on kind of the upside, but obviously a pretty nice recovery so far. Looking possible again, if we're running into some short-term kind of landmines with some like CPI and PPI and some other various like US economic data, but if we can manage to get through that without taking too big of a hit within the crypto space, we could see a pretty nice bounce here coming up soon. And so if we did see that, maybe we're looking at like the $200 range and then potentially back up here to kind of some of the recent highs up at about the 220. And maybe we even move past that and make it towards, some recent all-time highs up at the 260 range. So possibility there. Let's go take a quick look at Bitcoin. We'll see something very, very similar. You can see a really, really strong wick down that's been basically immediately bought up. Let's actually zoom in on this a little bit so we can see a bit better. Same type of thing. We fell below this liquidity zone. We fell below the Bollinger Band. As we've mentioned several times, whenever this happens, it's almost certainly going to come back in. We saw this also happen kind of coupled with a bit of a liquidation event where we saw a whole bunch of like leverage wipe from the market, some capitulation of a decent bit of people as far as selling was concerned. With that, obviously, once people kind of came to their senses, we saw a really, really strong kind of wick and buy up. And now we've seen, basically within about a day or a day and a half, we've gone from below 90 to upper 90s, about 97,000. So a pretty nice move to the upside. Again, there's several different charts we could look at this. We'll see. We can see that Kaspa here is holding above 3 cents, which is good. We'll take a quick look at ICP where we'll see something very similar. Same type of thing. We broke below this kind of $10 support, saw a really strong wick, and now we're seeing a bounce back, holding above that $10, at least for now. So, again, things looking good there. We did not break the bottom of the Bollinger Band on this one. So I actually did not take an ICP trade just because we didn't quite see some of the like really crazy oversold signals that we were seeing out of some others. And like I said, I didn't want to just take a quick detour to Kaspa because basically I wanted to show you guys what I was seeing yesterday. I thought about making a YouTube video. I didn't. Would have been a really good idea if I did, but that's okay. We'll just at least talk about what I was seeing, kind of what what was going on the chart here. And so what we can see, obviously we'd seen a ton of support at this lower trend line or at this lower level of support. We've put in a decent bit of support over here for, what is this, almost a month now at this point in time. So a pretty strong level of support. We can see stronger levels here. We can also see some wicks down a little bit below, getting as low as 10 cents. But same type of thing. We're sitting at the bottom of the Bollinger Bands. We've been seeing a lot of support here over the past period of time. And so when we, again, saw this liquidation event, also we haven't heard much about Kaspa. Again, part of trading in crypto is going and finding what's not popular currently. Because what's popular currently is obviously going to have a lot of attention and a lot of eyes on it. We haven't heard much from Kaspa. We know Kaspa is a strong project. We haven't seen much from Kaspa recently. And so I kind of had the idea of like, well, what's going on with Kaspa? We haven't seen too much with it lately. Maybe it's worth taking a quick look into. Obviously, we see about a 20% bump in one day, so a little bit of some bad timing from me on there, but same type of thing. You know, this is exactly what we want to be looking for. We're sitting on levels of support, things looking relatively decent with the Bollinger Bands, sitting kind of not oversold, but in the weak territory, and then we obviously see a really, really strong pump coming, just because, again, you know, crypto is a cycle. People are rotating back into it. And so obviously, you know, with this type of move, maybe we see a little bit more attention into Kaspa. Maybe we see it move back up to this 18 to 20 cent range. Hard to say for sure, but this is the type of stuff that happens, you know, when we're in crypto. So again, if you are wanting to make any of these trades, leverage trades, or even just spot trades overall, feel free to use my link in the description below for BTCC. As I've said, I'm still working with them. They are doing that 10% bonus on first time deposits, which is a really, really great deal. They are also doing the extra bonus is up to $10,055 per user. So BTCC obviously throwing a whole bunch of money at you to come trade with them if that is something you are interested in. They've been around for 13 years, so not much of a risk of them being a here today, gone tomorrow type of exchange. Again, anything can happen. It is crypto, but at least from what we've seen so far, looks pretty low risk, at least in my opinion. 300 plus crypto futures, so if there is something that you are looking to trade, they probably have it. Also 500x leverage. Again, I would strongly discourage you using leverage this high, but if that is something, you know, maybe you have a strategy or whatever, and that's something that works for you, obviously they do have that available. And then no VPN or KYC necessary. So if that is something that's important to you, then they do have that as well. So that's always good to see. Like I said, if you are interested, just feel free, check the link in the description below. Go on ahead, get signed up, and claim that free 10% bonus on your first time deposits. So moving on, I want to take a look at the total 2. Again, there's a couple of things. The total 2 is something that I've wanted to look at just because of the kind of structure that we're forming and how things are looking. I'm probably going to start covering this far more frequently on my channel just because I think this tells us almost anything we want to see, at least for right now. And then I am going to get back to the Bitcoin liquidation levels because we've seen some pretty interesting stuff coming out of there too. But starting here on the total 2 market cap, we can see when we had that liquidation event, it looked like we might be breaking the wedge. Again, if any of you know better, we know that like sometimes this will happen to be a little bit of a fake out and you know, maybe force some liquidations, primarily force some liquidations, but also maybe freak some people out because they think that the wedge is getting broken. As I've said before, until we see something close outside of this for like essentially like one candle for certain, but I would say if we close outside of it and then close a second candle outside of it, then we can say that the structure is probably invalidated. When we see a wick down like this, we've seen this before, right? So I mean, it's not something that's necessarily like super concerning. So obviously we pulled right back into it. It is very clear to see we are outside of this zone now. As I've said multiple times in multiple different videos, until we see something essentially break below this, break and close below it, importantly, and break or close above this, nothing really matters. I don't really care about any of the movement that's going on just because this is essentially, we're just ranging here. Until we see a break either up or down, it doesn't really matter. So moving on, taking a look at the fear and greed index, I did want to just take a closer look here. It actually does look like when I talked about this, we were sitting here, I think at like 61 on the greed. I was thinking we'd get back into neutral. I'd actually missed a previous day where we'd actually come back into neutral. So we have seen a little bit of cooling off in the market. I think it's possible that maybe we get back to neutral, but if not, I would say that, you know, we have kind of hit that expectation that I was having that we would come back into neutral. Right now, obviously, we're kind of moving closer back to extreme greed. We're kind of sitting about in the middle of greed at this point, so not a huge deal, but I think it's possible that maybe we come back to neutral. But if we don't, I would say that, you know, we can kind of check that box off because we have seen it fall back into neutral, at least for a momentary period of time. Now, moving on, I did want to also take a quick look at, let's actually look at liquidations first, because we can see in the past 24 hours, only $189 million wrecked. Now, This sounds like a lot, of course, and frankly, this is a lot for if any of you are around like at all during last summer, this would be a lot. But we need to keep in mind that this is coming off of yesterday where we saw like $820 million wrecked. So a ton wrecked. We can actually see if you look at the very top here, this is actually down 76% on the day. And so, obviously if we come down here, we can see a massive amount liquidated yesterday. And so now today it is making, almost $200 million look very, very small. And so, it's important to see that, we after a kind of a mass liquidation event like something like this, the market is not going to be moving a whole lot just because there's not that much leverage in the market. So there's not that you can essentially think of leverage is a little bit like a coil, right? When you've got the more leverage that you have, the tighter the coil is bound. And so the moves are going to be a lot more reactive one direction or the other because there's so much leverage within the system. When we have some sort of liquidation event like this, where so much leverage is wiped from the system, it kind of uncoils that coil a little bit. And so when we see these movements, they aren't as reflexive as what they might be otherwise. And so that's kind of why we're seeing prices today recover, but maybe not too crazy. It's just because we've seen a ton of leverage wipe from the system within the past 36 hours or so. We can kind of see this looking at the liquidation map. So if we look at the 1 day, we can see we're sitting at about 1.95 billion and about 2.6 billion kind of on the far edges. So essentially we've got about $5 billion total, or just shy of about $5 billion total, kind of in this entire liquidation map that we are seeing. This is about half, I would say, maybe 60% of what we normally see from kind of the daily. Usually we're sitting around 4 or 5 billion on each side. So the fact that we do have such low leverage in the system right now is because we just saw so many people get wiped out over the past day or so. Again, if we look at the 7 day, we can see here, 2.77 billion, very, very low on the 7 day. We can see here getting close to 5.6 billion, again very low. Usually we're seeing anywhere from 7 to 10 billion, I would say, on each side. 10 is kind of high. I would say 7 is probably closer to average. So again, pretty low here. And then if we look towards the 30 day, we can see same type of thing here. We're close to 8 billion on this side. Usually this is somewhere between 10 and 11. So not super low, but a little bit low on this side, and then quite low here at about 5 billion. Obviously, we're not seeing confluence like we've talked about in the past. We'll see all of these kind of pointing to in the same direction and showing the same thing. We're not seeing that here, and that is because we've had so much leverage kind of recently unwound, and so we're not really we don't have that confluence yet. Right now the market's still kind of just recovering generally from kind of the shellacking that we took over the past couple of days. Again, in my opinion, this type of thing is totally planned. It's very much kind of expected if you are kind of a higher up maybe, or some of the cabal, as they say, within the crypto system. Obviously, many of us are not, so we just have to kind of understand or be able to kind of predict some of these moves as they happen. Like I said, if you have been watching the channel, hopefully when you saw some of these dips coming, you're not really super worried or super freaked out about it. As I've mentioned several times, looking at this chart, we don't have, we're just ranging. We don't have a direction on the market. So if you are trading, hopefully you're trading low leverage, or if you're trading high leverage, very, very tiny amounts and very, very short trades, just because holding, like we saw yesterday, holding for a long period of time can be very, very dangerous, just because sometimes you get these rogue wicks that you can't really predict, honestly. And so anyway, hopefully you found the information in this video useful. I always find it helpful to kind of go through and take a look at kind of what we're seeing within the market. Hopefully when we go over some of these trading tutorial, I wouldn't say trading tutorials, but essentially going into some of the information of how to potentially be a better trader, assess the market a little bit more closely, a little bit better, a lot of that type of stuff. I'm hoping it is useful. I find it personally very, very useful just to kind of rehash some of the things that we've been seeing in the market, make sure that I'm kind of staying true to some of these best practices and first principles, things like that. I think it's always very, very helpful to do that. So anyway, hopefully you find the same. If you do, like I said, please do like and subscribe. It really does help me grow the channel. Also, if you have any comments, questions, concerns, anything like that, just drop those in the comment section below. I do try to read and respond to all of those, and I really do appreciate your guys' comments. A lot of you leave some really, really great comments that I do enjoy reading and responding to. So thank you guys for tuning in, and we'll see you in the next one.